Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Treasury hacked. The US says Chinese state-backed hackers gained access to workstations and unclassified documents using a third-party provider. China denies the claims. Meanwhile, China's services activity jumps, but manufacturing struggles to gain traction. Xinhua reports that President Xi Jinping is set to touch on deepening economic reforms in his New Year's speech. And global stocks are set to notch a second year of gains powered by Wall Street. The dollar closes in on its best year since 2015, while gold surges. Well, a very good morning. Happy New Year's Eve. And what a stellar year it's been. It has been for equities. You're looking at futures, though, all in the red this morning. It is thin volumes on this last day of the year, but a cloud of uncertainty hanging over things as we head into 2025 with, of course, Donald Trump set to be inaugurated on January the 20th. Flipping over to the cross-asset picture, let's check in on how the dollar is doing. It has been another stellar year as well for the dollar, fueled by Trump's re-election and the Fed, of course, being less dovish in its policy pivot. But the Bloomberg Dollar Spot Index a touch weaker this morning. Brent trading at $74 a barrel. Bitcoin really off the highs we had seen earlier in the year, 92,000 where we trade at the moment. And gold also a touch weaker today. But finally, checking in on Asian markets. Of course, we've had the Chinese PMI data this morning. More to come later in the week. But the Asia Pacific Index currently 0.1% weaker. Asian stocks set for a quarterly loss as the year ends. The CSI 300 down 0.8%. The Hang Seng stronger 0.1%. And the yen there at 156 per dollar. But let's get more now on this Treasury hack. The US Treasury saying that a Chinese state-backed hacker gained access to workstations as well as unclassified documents earlier this month. And that hack happened through a third-party provider, BeyondTrust, which also does the work for the Defense and Justice Department. So, of course, hugely concerning. But China has disputed the claim. So let's get more now from Bloomberg's US government editor, John Harney. He joins us from Washington. Good morning, John. Tell us what we know about what happened here.
Well, this we learned about from a letter that the Treasury sent to lawmakers on Capitol Hill. It was this breach hack was discovered apparently by the vendor sometime in early December. And as you say, it apparently involved workstations and according to the Treasury, unclassified documents were accessed by these operatives who are apparently associated with the Chinese authorities. Our colleagues Jamie Tarabay and Craig Torres report that the Treasury insists that the danger is over, that the hackers no longer have access to the Treasury. But I mean, there are many questions remain. Just what are these documents that were accessed? How did this happen? This company is supposed to be involved in some respects, with cybersecurity. And as you say, also, they have contracts with other government departments. So just how widespread will this go?
Yeah, so lots of domestic concerns for the US, but I suppose the biggest question is the international one. Where does it leave US-China relations as we inch towards the end of Joe Biden's presidency?
Well, it's another, here we have in this vast relationship between two superpowers, two adversaries, another problem really, and there's so many facets to it. Both President Xi and President Biden seem to be in their meetings in November of this year and November last year in California, seem to be eager to step back from confrontation after the possible spy balloon episode in this country, and Nancy Pelosi's trip to Taiwan, which caused a great deal of led to a great deal of acrimony, and questions about the South China Sea and fentanyl, which figured in the presidential campaign. So there was a somewhat easing of relations, but this and the Salt Typhoon breach, which involved this, which is separate from this Treasury episode, involved major telecom companies, and in that case, information from ordinary Americans was somehow accessed by Chinese operatives.
All right. Well, Bloomberg's US government editor John Harney in Washington, we thank you for that update. And we can switch focus now to China. President Xi Jinping set to give his New Year's speech today. Xinhua reports that he's going to address economic reforms in the year ahead, and also to say that the economy grew 5% this year. Let's get more now from Bloomberg's China correspondent Min Lo. Min, what are traders paying attention to today here?
Yeah, it's interesting that we just got the headline from Xinhua with President Xi saying that China has achieved that 5% growth target for this year. We typically get that data dump only in mid-January. Perhaps this is an early dose of an injection of confidence to the economy. We know that, there is still the structural issues in the economy that still persist, the weak domestic consumer confidence, the export-driven growth, which is really the bright spot this year, but is a potential vulnerability for the country next year. And in his speech, President Xi likely to once again deliver possibly quite a bright report card for the year, because this is usually a time for him to speak to his domestic audience, connect with them, and show that he cares about the daily bread and butter issues of the Chinese people. So he's likely to emphasize some of the achievements that China has accomplished this year, some of the innovations in science and tech, for example. He is also likely to set the tone for next year, perhaps highlighting some of the priorities for next year. And of course, investors will be looking for any sort of affirmation that he gives around China's prospect for recovery in 2025.
So we'll wait for optimistic mood music from President Xi later. But I wonder, is that and the PMI data we got today exciting enough, really, to stop the calls for more easing from the PBOC?
Yeah, we did get an expansionary reading for both the manufacturing and non-manufacturing this month, but the manufacturing PMI disappointed, coming in at 50.1 compared to the previous month's print of 50.3. And granted, there is this seasonal factor. It tends to soften towards the end of the year, but it does show some of the persistent weakness, especially in domestic demand. And you look at the non-manufacturing PMI, it's a big beat for that, 52.2. That's the strongest print since March. So that is an encouraging sign, especially because a big source of that improvement is coming from the rebound in construction. The construction PMI sub-index picking up to 53.2 compared to a contraction of 49.7 the previous month. So could this mean that there is a little bit of recovery in the property sector, or perhaps companies really just speeding up construction activity ahead of the Lunar New Year's holiday, and also those infrastructure related spending taking hold in the economy as well? But you saw that screen earlier. You look at the employment sub-index for the PMI, still well below 50, and that shows that businesses are still very pessimistic about hiring, which doesn't really bode well for consumer confidence.
All right, Bloomberg's China correspondent Min Lo in Hong Kong, we thank you. Great stuff taking us through those PMI numbers. We'll also get more PMI numbers, of course, in the form of the Caixin PMIs on Thursday. But just to take you through some of the other echo data that we're looking out for today, we've got at 7 a.m. UK time Turkey's trade balance, at 11 a.m. UK time Ireland's latest inflation data, and then later in the day, of course, it's going to be an early close for the LSE and Euronext, given that it is New Year's Eve. I hope you're all celebrating this evening. But as things stand, we are looking at futures pointing lower for the US session and pretty flat here in Europe. FTSE 100 futures down 0.3% as we head towards the open. We've got plenty more coming up on the programme. Asian markets on track for their first quarterly loss of the year, but global stocks powering towards a second year of gains. We'll take stock of the uncertainties heading into 2025 next, so do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's just gone 6:12 a.m. here in London, and we can focus on Asia now, where stocks really have been struggling for direction on the last day of trading in 2024. They're heading for their first quarterly loss this year after a week showing on Wall Street. We can get more now from Paul Dobson, our executive editor for Asia markets in Singapore. Good morning, Paul. Last day of the trading year. I hope you're going to put your feet up later. How are things ending for Asian markets?
Good morning, Lizzie. Well, you heard from Min before the break talking about some positivity in Chinese data, some positivity and encouraging comments from Xi Jinping. Not so much in the markets. Chinese equities struggling for any gains or traction today. On the mainland, the gauge is lower. In Hong Kong, little changed. And that's really that kind of sentiment that we've got for the Chinese markets. I did a segment on television earlier. I was talking with a US-based investor saying they're not at all in China, and it's a hard no on any investments at the moment. And I think that's part of the problem. You know, confidence in that market is so low. We've had so many disappointments that people really, would need a lot to convince them to come back in. It's a case of winning over hearts as well as minds here. And while we may be having a positive year for the first time since the pandemic for Chinese stocks overall, that really came in two bursts, one in February, one in September. The rest of the year was pretty flaccid, and if your timing wasn't good, you would have missed out on it altogether. So still clouds hanging over China, of course. That like a weather system spreads over a lot of the rest of Asia's markets as well, and these are pretty gloomy looking outlooks still heading into 2025.
But on the flip side of that, China's stocks have outperformed or performed well compared to emerging market peers for all the skepticism about China stimulus. Are we being too harsh about China in 2024?
Well, like I said, I mean, if you're looking for positives, there is a little bit of confidence coming back. For example, we've got a bunch of IPOs coming up in Hong Kong that were confirmed today and yesterday. So that gives us a little bit of confidence heading into the new year. You do have some glimmers of hope in the economic data and some signs of stimulus, but nothing like the big bang that the market's looking for. We're still a long way from recovering from the peaks that we had before the pandemic and even after the pandemic as well. So, for all that there's been some gains this year, timing would have been very important. Currency would have weighed on that all the same. And, looking forward to next year, there's a lot of worry as well, right? We get Donald Trump coming in January, already promising sanctions on China or more tariffs and all of the existing blocks to China investing in chips from the US as well. So there's a lot of clouds out there. So, you'd have to be a pretty optimistic viewer to think that Chinese equities had a good year, particularly when you stack them up against the US market, which of course, was a rip-roaring success all the way through.
But in light of all of that uncertainty that you just laid out for us coming in 2025, which assets are set to perform best and worst from what we know so far?
Good question. And without wanting to make predictions, I think that there's still a lot of optimism around Japanese equities, that economy looking a little bit brighter, helped by a weaker yen as well. Looking across the rest of Asia, India is a bit of a question mark at the moment. The economy has been deteriorating. Some of that enthusiasm and frothiness that we saw earlier in the year has dissipated, but maybe that gives you a stronger base on which to build again. People still quite excited about fixed income, but I think that the real problem for Asia and for a lot of the rest of the world is, what is Trump going to do in these first weeks in office? Are we going to get tariffs? Are we going to get very inflationary policies? Are we therefore going to get a stronger dollar, higher bond yields? And if we do, what does that mean for the rest of the world? Could exert a lot more pressure on currency markets, for example, and also on global trade and trade flows, which would be, all things being equal, a negative for growth and therefore an extra hurdle to surmount for equities outside of the US markets.
OK, Bloomberg's executive editor for Asia markets, Paul Dobson. Happy 2024. Happy New Year when it comes. Thank you very much. Now, just to update you, of course, we did report on the death of former US President Jimmy Carter, and indeed stock markets in the US will now close on January the 9th to observe a national day of mourning for him. The closure is part of a long-standing American tradition in which financial institutions halt operations following the death of a president. This now confirmed, and Carter, of course, died on December the 29th at the age of 100. He was the longest-living US president in history. Well, we're looking at futures currently pointing lower as we look ahead to today's session. But these are, of course, thin volumes as we head towards the end of the year. Similarly pointing lower here in Europe. But coming right up on Bloomberg Daybreak Europe, Elon Musk is looking for policy changes in South Africa to expand his Starlink satellite network. We'll bring you all the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We'll go to South Korea now, where the markets are closed, but the politics is raging. Lawyers for the South Korean impeached president, Yoon Suk-yeol, say that a warrant issued for his arrest is illegal. He's under criminal probe for insurrection allegations, and if the warrant is executed, he'd be the first sitting president in South Korea's history to be arrested. Let's get more now with Bloomberg's Bill Ferries. Bill, it's unclear here whether investigators are going to be able to even take the president into custody. So I'm kind of wondering what the next steps are in this political crisis.
Right. The president's lawyers are saying this is an illegal warrant. The opposition, of course, says that the government should get in line, that President Yoon and his team should get in line and cooperate with this investigation. We have two next big steps here. One will be whether investigators are able to or try to enforce this warrant and take Yoon in. They have up to a week, typically, to enforce a warrant. It's not clear what the timeline is in this case. But if that happens, that could be the next showdown in terms of whether Yoon cooperates or not. The other big issue we're looking at is the Constitutional Court, which has up to 6 months to review this impeachment by the Parliament. But their next hearing on this is scheduled for Friday, January 3rd. So that will be the next legal step in this process if there is no attempt to arrest President Yoon before then.
And of course, as the political turmoil deepens, the country is also dealing with the aftermath of the Jeju Air flight crash on Sunday, which of course killed all but 2 of the 181 people on board. We weren't talking about Korean politics for a moment. We are again now. But what's the latest with the investigation?
Well, investigators are looking at a couple things. One is one of the black boxes that was recovered from the wreckage. There appear to be some technical issues accessing that data, so they have people working on that right now. There's also a look at the reasons for that concrete enforced wall at the end of the runway, and whether that really maybe should have been there and may have made the situation worse. There is a little bit of a truce in the political sparring right now from both sides as they try to deal with this tragedy and deal with a period of mourning in the aftermath of that accident. But I expect that will disappear in the coming days as this court hearing on Friday nears and this showdown between the president and the opposition over this arrest warrant heats up again.
OK, Bill Ferries, we thank you for the update. Bill joining us from Singapore. Now, Elon Musk's Starlink satellite networks expanding globally, and many governments have been removing obstacles that Musk's taken on now that Musk's taken on this even more prominent role at Donald Trump's side. Bloomberg has learned that Musk's been in talks with the South African President Cyril Ramaphosa to discuss allowing Starlink's high-speed internet to operate legally there. Let's get more now from Bloomberg's Ondiro Oganga. Ondiro, it seems every day we're discussing Elon Musk. Now he wants this deal with Cyril Ramaphosa. What concessions do you think he will make in exchange for that access?
Hi. So what we know so far is that President Cyril Ramaphosa and Elon Musk are having conversations, particularly to change strict laws in South Africa to enable Starlink to operate legally in the country. And the appeal for Starlink has been growing so much that there has been unauthorized use to an extent that the telecommunication regulator has issued warning of up to 270,000 USD in fines for those who were found liable. And in part of those concessions is the 30% ownership that should go to historically disadvantaged individuals. Elon Musk does not want to do that because he thinks it will dilute the control of Starlink. So what's happening now is relevant ministries in South Africa are having conversations with regulators so that foreign companies can have access to the local market in exchange for equity equivalent in terms of investment and jobs. And South Africa also wants to attract more of Elon Musk businesses set up battery production for Tesla. And we're seeing the ground softening because, like you mentioned, Elon Musk now has a close proximity to Donald Trump, and that has increased his appeal and the appeal of his businesses.
But I mean, if Donald Trump hadn't won the election and Elon Musk didn't have that relationship with Donald Trump, how would his businesses have fared in Africa? Just talk us through the expansion of Starlink in Africa previously and the hurdles that it had faced.
Lizzie, he would have fared just fine. I mean, if we take a look at a country like Kenya, expansion has been very rapid, particularly in counties outside of Nairobi. Starlink has been very strategic. They've slashed their prices, they've boosted their marketing, and the distribution is countrywide. Kenyans can actually shop for Starlink kits while they're shopping for groceries in hypermarkets. And if you look at the advantages, you'll be told they're easy to install, 27% cheaper than local internet providers, and also offer 10 times more speed. So they would have done just fine. It's just that they faced a little bit of pushback in the market with local providers saying that if Starlink is to operate in markets like Kenya, then they have to play by the same rules like local providers.
And I mean, I wonder whether we're going to see more resistance to Starlink crumbling worldwide after Donald Trump is inaugurated. What do we know about Starlink's expansion into Ukraine?
So what we know so far is that they'll be offering direct-to-cell satellite connectivity, and Kyivstar, which is the telecom company in the country, will be offering text-based messaging using Starlink technology in the fourth quarter of 2025. And then later on, we'll see voice and data follow. And just for background, ever since Russia invaded Ukraine in 2022, they've been very deliberate in destroying the infrastructure, and telecommunication network has been vastly affected. Russia has also been trying and ramping up efforts in jamming satellite links, and that has broken down communication between the satellites and the ground terminals. So what these portable Starlink terminals are going to do is they're going to boost and bolster Ukraine's war efforts. They're going to streamline communication within the military and also within the civilian population.
OK, Bloomberg's Ondiro Oganga, we thank you for that update on how Elon Musk's businesses are faring. Confident that he would have done well with or without Donald Trump. But let's check in now on our assets across the board as we head into this last session of the year. We've got the Bloomberg Dollar Spot Index a touch weaker as things stand, but it has been a phenomenal 2024. We've got Brent trading at $74 a barrel, Bitcoin there at 92,000, way off the highs of the year, and gold pretty steady. But if we just zoom into gold briefly, it's up 26% in 2024. So it's been its best year since 2010. But coming up, companies around the world are scrambling to get ahead of Donald Trump's threatened tariffs on the US's biggest trading partners in 2025. We'll have a look at the global trade outlook next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Treasury hacked. The US says Chinese state-backed hackers gained access to workstations and unclassified documents using a third-party provider. China denies the claims. China's services activity jumps, but manufacturing struggles to gain traction. Xinhua reports that President Xi Jinping is set to touch on deepening economic reforms in his New Year speech. And global stocks are set to notch a second year of gains powered by Wall Street. The dollar closes in on its best year since 2015, while gold surges. Well, a very good morning. Happy New Year's Eve. These are, of course, thin volumes in this period, but we are looking at futures pointing a touch lower on both sides of the pond. You've got this cloud of uncertainty hanging over the turn of the year as we await the inauguration of Donald Trump. But if we flip over to the cross-asset picture, of course, the dollar has been having a roaring end of the year, the best year since 2015, fueled by Trump's re-election and, of course, the Fed's less dovish policy pivot as well. But you're looking at euro dollar there a touch weaker. The 2-year Treasury yield at 4.24%. Japanese markets, of course, closed today. Brent trading at $74 a barrel and Bitcoin at $92,000. So weaker than we had been seeing earlier in the year off the back of Donald Trump's election as well, but we'll see how it fares into 2025. Now, as I mentioned, uncertainty really is the theme as the year turns, especially for global trade. It's headed for a transformation as leaders across the world scramble to respond to Trump's proposed tariffs. And we can dive deeper into the economic impact of that potential US protectionism now with Bloomberg News' desk editor, Jill Deesis. Jill, I wonder how businesses are preparing for the prospect of higher expenses, potential disruptions, when we just don't know whether the second Trump administration is going to be a blueprint of the first.
Yeah, that's right, Lizzie. I think, uncertainty is really the key word here and something that we're seeing from a lot of businesses worldwide. I mean, we've talked to everyone from, German winemakers who are worried that Trump could potentially bring back 2019 era tariffs. That's, something, that they're trying to sort of get ahead of, maybe front load orders for, seeing a lot of concerns over what, additional tariffs on Chinese goods could look like, given that Trump, sort of signaled in his campaign that he wanted to raise levies on China by as much as 60% or so, depending on these goods. So, yes, lots of uncertainty here, especially when you're also seeing this sort of trickle over into, threats that Trump is making, not just toward adversaries, but allies as well. You just have to look at some of the comments he made about potential tariffs on Canada just a few weeks ago, still as president-elect because of his concerns about the fentanyl crisis and sort of border control. So this is really kind of, petering out into a lot of different impacts on, a lot of these businesses that, again, are either trying to front load orders, maybe they're trying to find new suppliers that, they're trying to, game out, maybe won't be impacted by additional tariffs. Maybe they're trying to renegotiate terms with other suppliers. So it really does kind of come down to a lot of mess here as, a lot of these businesses really just kind of figure out what they can do to prepare for the next 4 years.
Well, in terms of that mess, are you seeing businesses scramble to get goods through particular ports? Are there particular chokeholds forming? Can the ports deal with this preparation for January 20th?
There certainly, Lizzie, are already signs that we're seeing, some higher, carry through in some of these ports. Port of Shanghai, obviously, one of the world's busiest, is seeing something like a 30% uptick in activity there. You're also seeing, ports along the U.S. western coast that are seeing, some busier traffic there. I mean, a lot of this does really indicate that there are businesses that are trying to get ahead of any potential tariffs by doing a lot of that front loading. Of course, that kind of leaves them with a lot of inventory that, they're going to have to kind of deal with as they figure out how to navigate all of this. Because again, as we've been talking about, a lot of these tariff threats at this point are just, very uncertain. I mean, it's stuff that, we'll have to see how much of that actually kind of comes through once Trump takes office in January.
All right, Bloomberg News desk editor Jill Deesis, we thank you for that preview of global trade in the coming year. Now to one of our top interviews. BlackRock CEO Larry Fink remains bullish about the strength of the US economy. He says he doesn't like hard or soft landings, or at least talking about them. He was talking to Bloomberg's Francine Lacroix at the Berlin Global Dialogue back in October, and he explained why that is.
I don't see any landing. The economy is going to continue to grow at 2 plus 3%. I don't even know why we use a landing. Landing last time means it goes to zero. It goes, I know we use those words. It's really fun to talk about.
But it's not going to crash.
I've been very consistent. We're not going to have a hard landing, but I don't see a soft landing. We're going to continue. We're continuing to move and navigate it. But despite all that, there are segments of the economy that are struggling. There are segments of the economy that are doing really well. We spend so much time focusing on the segments that are doing poorly, and I'm not trying to suggest that's not the right thing to do, but we're not looking at it in the holistic way that other parts of the economy are doing really, really well. Look at corporate earnings overall. They've been very strong. And I think they're going to continue to be very strong. We do have segments of the economy that are very strong, and I think that's why I don't know why we talk about a hard or soft landing. We're continuing. We're going to grow at 2 to 3%.
Where does the smart money stay away from? Is there anywhere in the markets where either something is priced to perfection or it's too risky? I know we talk about commercial real estate for such a long time.
Move up and down. You always see, you mentioned like commercial real estate, you see too much money moving in one area, then it runs away from it. I think that's what markets do. We test the outer boundaries of pricing, and it becomes maybe a level in which that we don't find it's a great outcome for long-term investing, and then money moves to another destination. I think that's a natural movement, so I'm not worried about one area versus another area. The one other thing that I think everybody asks me is, is the market so pricey and yet all this geopolitical issues? I would argue today, because of the expansion of the global capital markets, we're diffusing more risk than ever. There is actually less systemic risk today than ever before. You mentioned private credit. Private credit is chiefly matching a liability and an asset together. It's not leveraging 8-to-1 like in a banking system. That's a good example of diffusing some systemic risk. But as more and more capital's broadening out how they invest, where they invest, that actually reduces less concentration in one area. Of course, we've seen, especially in cities, a decline in commercial real estate, but that's a natural process. But there's nothing systemic about it. You may lose money on one building, but you're moving into other destinations like data centers. You're moving into different cities that may have rising population growth. But, you can't fight demographics. So there's some cities that are shrinking. Obviously, commercial real estate in those cities are going to be declining with that declining population.
Larry, what's your play in private credit? How much bigger do you want to be? How much do you want in this space?
We have large aspirations, as we wrote about it last year, and we continue to be building out a private credit area, and there's more to come. We're very excited about our position. If you just think about the role of infrastructure debt, if you think about what we announced with MGX and Microsoft, raising $30 billion of equity, but we're going to raise $100 to $120 billion of debt associated with those data centers. So I actually believe as we move out and building out more and more infrastructure investing, you're going to see more infrastructure or private credit associated with that. And so that will also represent a great opportunity that you have a hyperscaler like a Meta, like a Microsoft, like an Amazon, you have their credit that you're going to be able to leverage it up and provide returns, stable returns over 15, 20 years, because that's what those leases will be on these data centers. And so you have a great opportunity for long-term investing.
BlackRock CEO Larry Fink speaking to Bloomberg in October. Just to recap some of the other stories making news this morning, US President-elect Donald Trump has endorsed Speaker Mike Johnson, avoiding a potentially crippling leadership fight in the House. Johnson also earned the backing of Elon Musk, who, of course, has become a close advisor to Trump. The House is set to hold its vote for Speaker on January the 3rd. And both Russia and Ukraine have said they exchanged a total of roughly 300 prisoners in the first swap in more than 2 months. It's one of the biggest such deals since the start of the war. Well, next up on the programme, we're going to talk about the cold snap facing Europe in January. It looks like Hogmanay is going to be cancelled in Edinburgh. This is Bloomberg.
Aging reactors, energy prices, disasters. Nuclear power has been falling out of favor in the U.S. for decades, but the conversation is changing. The intensifying threat of global warming and the explosion of AI is boosting the outlook of nuclear energy. This is an inflection point. More than 100 nations have set lofty net zero targets, forcing the world to weigh the inherent risks and high cost of atomic power, which has no carbon emissions. That includes the United States.
The climate change moment is upon us now, and we need to meet that moment today and decarbonize our grid.
I think nuclear plays a very significant role in fighting climate change. It is already the largest source of clean electricity.
Experts say the upswing in nuclear power plant construction needs to continue to both meet net zero emissions goals by 2050 and ultimately to help smooth the world's transition to renewable energy.
So it's been an extraordinary change from when I grew up in small town Sterling, Illinois, to, really seeing this renaissance of interest.
Especially for someone who's been in the industry for a while, because we went through this period where the nuclear renaissance phrase got thrown around a lot, and it didn't come to fruition. But I will say I am very optimistic.
Well, that was our Bloomberg Originals team looking at why nuclear energy is making such a comeback in the US and across the world. Staying with energy, though, parts of Europe could be set for a colder than usual January, boosting demand for natural gas just as the continent confronts the end of a Russia-Ukraine pipeline transit agreement this week. And we can speak to Bloomberg's Priscilla Azevedo-Rocha about this now. Priscilla, Hogmanay's cancelled in Edinburgh. A cold snap looks to be on the way. How close is that going to take us to the brink in Europe in terms of gas reserves?
Hi, Lizzie. Good morning. So the situation this year is looking quite sensitive. We're seeing gas reserves this year. They have been depleted quite quickly compared to previous years. We are now at 73% only compared to 86% at the same point last year. And why do we care about that? Because for the past 2 years, since Europe's energy crisis, we have relied heavily on gas reserves to keep on navigating the cold snaps that the regions eventually faced when Russia cut most of supplies to Germany.
And by the end of today, we should know whether, when it comes to the halt of Russian natural gas through Ukraine, whether there'll be no deal, no gas flows, no deal, some gas flows, or a deal reached and gas flows continuing. So what's looking likely?
Well, if previous times are any guidance, we won't know until the very, very last minute. What is different this time around, though, is that we're going to the third war of Russia, the third year of Russia's invasion of Ukraine. So the situation is a little bit different there. And so strategists in Wall Street, Goldman Sachs, Morgan Stanley, JP Morgan, they all have priced in a no transit deal heading into next year. But we won't really know until the very last minute, and anything can change. The first indications we will get, it's around 5 p.m. London today, which are nominations and orders, which shows us if clients in Europe have bought gas from Russia. And this is the first really tangible sign, but we won't really know until tomorrow morning, 5 a.m. London time, if gas actually came to Europe.
I mean, in terms of how that feeds back into the war, President Zelensky's said repeatedly he's not going to let Russian gas, which of course funds the Kremlin's war machine, transit through Ukraine after this deal ends. So then is it inevitable that the gas pipeline is going to become a target for missile strikes if it stops?
Well, we've seen throughout this whole war that Russia has bombed heavily Ukrainian energy infrastructure, but this pipeline has been spared the whole time. It has been almost 3 years since the invasion, of the full-scale invasion, and this pipeline has been spared. We can't say for sure what's going to happen next. We still don't know if flows will continue or not. But if this pipeline no longer carried Russian molecules through the continent, it will inevitably become a target.
OK, Bloomberg's Priscilla Azevedo-Rocha, we thank you for that as we look ahead to that potential deal. Now, in other news, billions of dollars are being invested in artificial intelligence, including by big tech. But there is growing concern about a lack of return on investment. Co-founder of UK-based company Faculty, Angie Marr, describes this as the AI paradox. And she's been speaking to our very own Tom McKenzie about the unprecedented surge of interest in AI.
Despite billions being poured into AI, but the value for enterprise remains low. And we're changing that. As Europe's leading applied AI specialist, we provide AI systems that helps organizations make better and faster decisions. And over the past decade, we have delivered some of the most nationally and internationally impactful AI solutions. We have a decade of thought leadership in AI and AI safety, including being the first to introduce President Biden to deepfakes. We're the reason that Theresa May, our Prime Minister, made technology company take down their terrorist propaganda within 2 hours, and we're the company that has helped save thousands of lives during COVID.
Gosh, okay, that's quite the pitch. Yes, you did have that government contract, didn't you, around COVID, and so there's maybe some efficacy there that came through in terms of the distribution of some of those COVID health requirements that were needed. Talk to us. It's a complicated environment if you're the CFO of an enterprise and you're looking at how you spend and integrate AI. The board is screaming at you to spend on this stuff. There's multiple different models you can choose from and then applications you can choose from. How do you work with enterprises to navigate that, and how much integration are you seeing right now?
Yes. So what it is really important is not thinking about what's the model, but rather what's the business problem. And first, what's the business problem? Then what's the technology? And what is the processes and the decisions that drive that business KPIs. And from there, you can figure out the technology, then the data, but everything flows from what's the business problem.
So that was Angie Marr, co-founder of Faculty AI, speaking to Bloomberg's Tom McKenzie earlier this month. Now to a UK tradition, the New Year's Honours List. Former HSBC CEO Noel Quinn was knighted in the list this year. Quinn's 5-year tenure as head of Europe's biggest bank came to an end in September. Other notable recipients of honours include the London Mayor Sadiq Khan, England's men's football team manager Gareth Southgate, who guided the team to the European Championship this year. Well, looking at the cross-asset picture, you have got the Bloomberg Dollar Spot Index pretty steady as we head towards the end of the year. It's been a good one in 2024, though. We'll have plenty more coming up for you on the programme. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, investment management firm New Century Advisors is warning that traders and the Fed can't take the US labour market resilience for granted. Chief economist Claudia Sarm told us more about potential blind spots for the economy in 2025.
If we could keep it as it is right now, largely, this would be another great year ahead of us. You know, we've been surprised at how well the past 2 years have gone, particularly when you think about growth and how the consumers have held up. But that doesn't have to keep going. So what we really want people to focus on are the blind spots, right? What could go wrong? Who isn't getting enough attention? And I think one area, you know, if I had to maybe point some Fed officials to a blind spot, I think, you know, they showed a lot of complacency in their last summary of economic projections on how well the labor market would continue to hold up. You know, what we saw them kind of write down, the typical official, was something that basically has the unemployment rate sticking about where it is right now for the next 3 years. That's a pretty remarkable and frankly would be very unusual path to the labor market. And yet there was all kinds of concerns about inflation and the uncertainty around inflation. But I think I'm still concerned that there are things in the labor market, while good, don't quite look like sustainable. And that's where the problems can come in. And so that's one area
what you
that I think is
Claudia.
still worth watching.
So if I ask which is a bigger risk, a weakening labor market or a stubborn inflation, you're going with the former rather than the latter.
Inflation's fine right now. I mean, we are really not that far from 2%, and we've seen a lot of encouraging signs under the hood that we are getting to this last mile on inflation.
But right now,
the labor
that's
market
before tariffs. That's before we deport millions of workers. That's before Donald Trump comes into office. So things could change drastically after January 20th.
Absolutely. They could change drastically. And I think it's appropriate that we have had a very deep conversation about the policies that have been put on the table. And there have been a lot of policies put on the table. And it's really important to have this conversation and talk about some of their potential pitfalls. And maybe we won't see all of them put into place. And that probably would be a good thing for the economy. And yet, kind of taking for granted the good stuff that we've got going in the economy that's a little more nuts and bolts, like the labor market functioning, and just saying, oh, well, that'll just keep going. That's all fine. It's in a good place. I think that's that could be a real mistake in terms of, because the labor market in particular is always and has been the past few years such a linchpin to this amazing period of a big disinflation. Growth has stayed strong and unemployment has stayed relatively low, and that's something we want to keep going.
Inflation's fine. Well, you heard it there from Claudia Sahm, New Century Advisors chief economist, speaking to our colleague Matt Miller. Let's see in 2025, eh? Well, in these last few moments of 2024 with you, let's take a look back and stocks for France through this year. Of course, it's been a year of political turmoil for the CAC 40 to battle through. And as you can see here, it's underperformed the European benchmark the most since 2010, which looks even more grim if we flip the board and look at the US picture this year. You can see US stocks are set to have the biggest outperformance compared to the rest of the world since 1996. But if we flip again and look at 2025, maybe you'll find a bit of opportunity here in the UK. We really are in the bargain basement. We do not have the big tech names to offer perhaps on the FTSE, but we do have cheap equities, and that is both absolutely and relatively, as you can see in this chart. All of these charts are available to Bloomberg Terminal users on the terminal, and you can also find the others used throughout the show by going to GTV Go. Anna Edwards and Kriti Gupta are here for the next hour, the next couple of hours of Bloomberg TV with the opening trade. But that's it for Bloomberg Daybreak Europe. I'll wish you a happy new year. This is Bloomberg.